Thank you for watching this edition of Community Roundtable. I'm your host, Henry Huang. One of the bills that we get, I know we get a lot of bills in America, but one of the bills that we get every year, probably the biggest one, is our house property tax bill. Now, do you ever wonder how these property taxes are assessed? And also, given the current economic downturn, a lot of housing prices are dropping. How do we know how the assessor's office kind of assess the property value is? Well, today we are in a special treat. Today in our studio, we have invited Ms. Carol Quan, who is the special assistant to the Los Angeles County Assessor's Office, Rick Auerbach. Carol, welcome to the show.
Oh, thank you, Henry. It's a pleasure to be here today.
Yeah, I'm sure in a lot of our viewers' mind is that how does the county actually assess their property values? I know it's probably one of their biggest expenses of the year.
Right. Well, when someone buys property, let's say, for example, you have a person buying their home. Normally, the sales price is what we would enroll that to be the base value. So once you buy property, let's say you pay $500,000 for it, and we accept that purchase price, and we enroll that. That establishes a base value. So from that particular value, the tax rate is applied. So basically, the average tax rate for LA County is about 1.25%. So you will expect a bill of about maybe just around $6,000 per year. But under Prop 13, a law that was passed back in 1978, the assessed value, once it is established, can increase up to 2% a year, no more than 2% a year, and no less than 1% a year. So basically, even though the base value is $500,000, the next year it'll be $500,000, plus another 2%.
If there's an increase in the housing price. Right?
Well, it doesn't. Even if the housing market's going up, let's say during the run-up, the housing values are going up 10%, 20% a year.
Right.
But under Prop 13, the assessed value does not increase more than 2% a year.
Right.
So in essence, you're not being assessed at the market every year. You're being assessed based on your base value plus 2% a year thereafter.
Okay. Now the base value you mentioned, is it the sales price or the average price throughout in your area?
Now, typically in a normal market, the sales price is usually the fair market value, and that would be the value that we would enroll on the person's property.
So say there's on the same street, two houses exactly the same, but it's selling at different prices. But it's the sales price, the transaction price, that counts as the fair value in your office.
Well, basically, if these are two exact same houses, then we would go with, well, what is the fair market? We would have to look at the circumstances, because if they're exactly the same houses and they're selling at the exact same time, the values should be very close to one another. If there's a situation where maybe there's some problems with one property that we are not aware of, then the buyer or someone needs to let us know that this property is selling for less because of these extenuating circumstances, because of the condition of the property.
Right.
And that's why it's going for less. We were talking earlier regarding, let's say, foreclosures, for example.
Right.
And people say, well, I paid $400,000 for my property, and this is the fair value, I think, but I bought it in a foreclosure. So is that what you, the assessor, will enroll?
Right.
Well, we will look at the market, because typically we do not accept the foreclosure price as the fair market value to enroll onto a person's property. And if the market in the area says, no, the market is really $600,000, but due to foreclosure you got a really good deal, we will not necessarily enroll the $400,000. We may enroll maybe $500,000, or maybe we will enroll the $600,000. It depends on what market information we have on hand. So
I see. So people that thinking, okay, I'm buying this house for, let's say, the example you use, 400,000, but while in the short sales or foreclosure, however, the market value of that area or the same type of house is $500,000, so they cannot be going into and thinking, okay, the selling price is the price that I should be assessed on.
That's correct. That is correct.
But
sometimes when there is a foreclosure and that property has been listed and it's in foreclosure, it's been listed for a long time, and the market is really the foreclosure sales, then we may accept the reported price in the foreclosure and enroll that.
Right.
But we look at it on a case-by-case basis.
I see. And you said, let's come back to Prop 13, the 2%.
Right.
So a lot of people are probably buying these at foreclosure because a lot of investors now are buying to short sales.
Right.
And say you give them an assessed value of this house for $5 million. In the next 3 years, if the price of these homes are not going up, would they be getting a discount, or that 2% is applied every year? How would that go?
Okay, you're saying basically the person buys a property for $500,000. Right now?
Mm-hmm.
Right now they're paying $500,000.
And the next 3 years, the value, the housing price continue to decline.
Okay.
And because maybe I misunderstood, because you said Proposition 13 gives the right for the assessor office to give a 2% increase every year. But what if the housing prices continue to decline?
Okay, well, that brings up the situation to where we are at today. Now, what we have done proactively in our department is that we have gone ahead and reviewed single-family residential properties and condominiums that sold between July 1 of 2004 through June 30th of 2007. Earlier this year, we did a proactive review of these properties, and we reviewed 318,000 single-family residential properties. And of that 318,000, we reduced about 128,000 properties. So those homeowners would have received a notice in June of 2008 telling them that we are reducing the assessed value of their property. So their 2008 annual bill, which they currently have on hand, would actually be based on the lower assessed value. And the reason we do this is that we look at the value, the assessed value as of lien date, which is January 1.
Okay.
And so if as of January 1, the assessed value of your property is greater than the fair market value or the market value of your home, we would enroll the lower of the two. So let's say in January your assessed value was $600,000, but right now the market is at $500,000.
Right.
Or not right now, I'm sorry, I need to go back. In January of 2008, the market is $500,000. We would enroll the $500,000, and that is what your 2008 annual bill would be based on.
Right.
But, people are saying, well, okay, but, the market's gone further.
Right.
Right now, the market is now at $450, for example. Can I get the $450? And we would say, we have to look at what was there as of January 1, not what is there in November.
Okay.
So we encourage people, if you did not receive a notice from our office and you feel that your assessed value is higher than the market as of January 1, you can go visit our website, www.assessor.lacounty.gov, and you can download the application Decline in Value Reassessment. And you will go ahead and fill out that form and send it to us.
Okay.
Now, the deadline for filing is December 31st, 2008.
I see. Okay. Well, why don't we take a commercial and we can come back and we can talk about further about this. I think this is very interesting for people to know how to reduce their property tax bill given the current situation.
Okay.